Hello and welcome to the Irish Life podcast series called Embracing Investments. Here we talk with key people at Irish Life Investment Managers, or ILIM for short, who shared their expertise and insights on the main issues that impact on the value of people's pensions and investments. My name is David Haslam, and in this podcast, I'm joined by my colleague Brendan O'Regan, who is ILIM's Head of Property Fund Management. The world is slowly coming to terms with coronavirus and the impact it is having on our lives today, and the uncertainty of the impact it will have on our lives tomorrow. While there are promising signs that the difficult measures taken everywhere are working to control the outbreak, the extent of the human and financial toll are still largely unknown. Stock markets have shown significant resilience and confidence that we're moving in the right direction to minimize that toll, but people are still concerned about the shorter-term effects on investments and the longer-term impact on retirement savings and pension nest eggs. Many are either owners of property or directly or indirectly invested in it and wondering what the present and the future may hold. I've invited Brendan to give us his thoughts on property as an investment, some insights into the managing of property portfolios, and the outlook for existing investments and new opportunities that he and his team are actively looking at. On that note, I would like to introduce my guest. Hi, Brendan.
Hi, David.
Brendan, I think it's fair to say that the last 20 years for property has seen its fair share of ups and downs, from the highs of the early noughties to the lows following the global financial crisis. Yet the interest levels in property remain high, whether it's a property to live in, to rent, or to invest in. Can you give us your insights as to why you think that is?
Thanks, David. Well, property is what we call a real asset, and over the longer term, it can deliver both income and capital returns and protect against the impact of inflation. This is an attractive combination for all investors, and at different times, they value each of those parts of the return differently. Over shorter periods of time, the rise in prices can attract investors who are looking for a good return on their capital whilst also benefiting from the rent or the income. I suppose periods when interest rates are low and investment markets are strong, like the early noughties, are a good example. Other investors, like pension funds, look more at the benefits that long-term sources of income can bring to help provide retirement benefits.
Yes, but I suppose investing in property has not always ended well for many people.
No, that is true. So it's important to understand the type of investment that property is. It is a long-term investment. Property does not trade as easily or as quickly as shares or bonds. So the benefits of investing in property are often delivered, not just in a different way, but over a different time frame. When looked at in that context, property can provide a valuable and different type of return within an investment portfolio. And that really is the key as part of an investment portfolio. Investing in any asset on its own, whether property or shares or bonds, leaves investors exposed to the ups and downs of that asset alone. Spreading the investor risk across assets, which we call diversification, reduces the impact of any one asset class on overall performance.
Okay, that seems reasonable. So we should invest in property, but not just in property.
Exactly. Even then, within the assets that we manage, we also diversify for the very same reason. So, for example, we diversify by sector, by tenant, by building, by rental levels, and by location. As the largest property landlord in Ireland, we've always believed in the benefits of and the need for diversification in our portfolio. Given the current fluctuations in property and other markets, we are seeing the benefits of that diversified portfolio approach. As you know, David, we manage over 150 properties, mainly in the office and retail sectors, which are generally situated within the prime locations, and we have about 650 tenancies across all sectors. This gives us a unique insight into the Irish market during this challenging time.
So where are you seeing difficulties emerging at present? I presume the future of offices and retail is high on your agenda, given the amount of media commentary on both.
Yes, absolutely. The main challenges we're seeing right now are in the office and retail sectors. For offices, it's more about the long-term structural and occupational changes that may occur. The past 24 months has not seen any material increases in top-line rental levels in Ireland. And while there is significant development ongoing, more than half the space under construction is already let, and there is a low vacancy level. Prime office rents are around 55 to 60 euros per square foot in general, and they are quite resilient. So that sector is facing into the current situation from a position of strength. For example, we have two large office buildings under construction at 70 St. Stephen's Green and at Cadenza and Earlsfort Terrace, both of which are pre-let at rents similar to those that I just mentioned. And well, for all of us at Irish Life, it is very pleasing to see construction workers back on those sites in recent weeks. And we look forward to delivering these fantastic buildings to our tenants. But that said, in the current environment, I am often asked about the potential fallout from people working from home. It is a reality for so many of us now. But we think a more normalized environment will resume in time. I suppose, from my own perspective, I miss the small things like my coffee breaks in the office, which would involve a walk with one or two colleagues, and that has both social and work benefits. In contrast, for me, a break at home might involve unloading the dishwasher or briefly chatting with the kids and convincing them that my day isn't over just yet and that I need to go back to work. And for all the stories of less office space being needed, there are equally just as many arguing for the same or more space being needed. What I do believe is that many people are keen to return to the office sooner rather than later, but with more flexible arrangements.
Yeah, I can certainly relate to the breaks all right, as I'm sure many of those listening can. So what about retail then?
For retail, it's both the immediate challenge of retailers just staying in business, while in the medium to long term is the acceleration, I suppose, of the headwinds brought about by increasing penetration of online retail. One surprising feature is that we're seeing our smaller retailers are being more nimble and flexible in managing through this time, while a lot of the larger multinational retailers are burdened by the sheer scale of the challenge in front of them and their inability to react to each localized situation. They are catching up, but it's a credit to the smaller retailer as to how well they have reacted. The ongoing structural changes in retail from online sales, though, will be compounded by the COVID crisis, and retailers are facing significant challenges, but a new norm will emerge.
Okay. These are well-established sectors within property. In the last few years, though, we've seen the investment market for property evolve with the advent of more property companies on the stock exchange and, of course, REITs. Have there been any significant developments in terms of what you can or will invest in?
Yes. We're always on the lookout for new opportunities that fit with our overall approach to managing property, and which will ultimately benefit the underlying investors. We recently moved into the PRS, or the private rented sector, which we think is an important and growing sector in the Irish property market, and which adds further diversification to the current portfolio of assets we manage. Housing supply is expected to be well below demand levels for at least this year. So whilst most people agree that increased apartment construction and living is the only means of meeting the growing population need, the market is not yet meeting this critical need for rented apartments. For example, of the 20,000 or so units built last year, only about 2,500 of these were apartments built in Dublin. And in the rest of Ireland, only about another 1,000 apartments were built. There is increased risk that the new construction supply of PRS apartments will actually decrease in the short term, which will put further pressure on the limited availability of rental stock. That said, rents are expected to remain stable at best in the short term, while the most downside risk is at the higher end of the market. We think longer-term investors, though, will continue to invest in Irish PRS due to its attractive income return and the opportunity to scale in a growing market.
Okay, that sounds like a really interesting development, if you'll pardon the pun. I suppose, finally, and this is the million-dollar question, what are your views on current valuations and the outlook over the next 12 months?
Well, I suppose by the end of March, or within weeks of the lockdown, the impact of COVID was already been reflected in our portfolio valuations, as all valuers in Ireland and across Europe inserted what they're calling a material uncertainty clause in their valuations. Essentially, valuers were saying that due to the market events, and in particular, the almost immediate cessation of investment transactions, they had less certainty on asset values. Unsurprisingly, retail was hit first and hardest, as investor appetite for this sector is significantly impaired right now, and the rents that retailers can afford to pay is certainly less than it was before. It will be the back end of this year before we get a better sense of the exact impact on values in each sector. The longer-term outlook, given what we know now, it means that investors will require higher returns in the future to reflect the current uncertainty in all but the best properties. In addition, where there is increased income risk, such as in the retail sector, this will undoubtedly translate into higher yields over the course of 2020 and perhaps beyond. The underwriting of tenant solvency is of increasing importance in pricing risk. I do think, however, that some of the perceived increased risk may reverse as markets pick up in the final stages of the year, and lower interest rates are likely to give property yields some support over the medium term.
Brendan, that's been a fantastic whistle-stop tour of property. Thank you for taking the time to share those insights. I think they provide some clarity at a time when I think our listeners will appreciate it most. Once again, the message around spreading risk, not just across different investments, but also within investments, comes out loud and clear. And I take great comfort in the expertise that Ireland's biggest landlord brings to bear in this uncertain environment. That's all from me. Thank you for your time. I hope you found this podcast useful, and I look forward to talking to you again soon.
Irish Life Investment Managers is part of the Irish Life Group and manages assets for Irish Life Assurance. Irish Life Investment Managers Limited is regulated by the Central Bank of Ireland. Information correct as of the 12th of June 2020.